Good afternoon, G3 traders. This is Greg Gallagher, and we're going to take a look at the market March 25th, year to date. We're looking at week 12. Well, the market made some progress this week. And this is a chart of the SPY, a 6-month chart. And just so everybody knows how the charts work, the blue dotted line represents the all-time high. The green dotted line means that we have a position. If this was a solid green line, we don't have a position, but that would be where we would be interested in buying it. The solid blue line is the 50-day moving average, and the solid red line is the 200-day moving average. Now, the blue is crossed under the red. That indicates that we've had a black cross or a death cross, which technically is not very good. But you can see here from this W formation, and I'm kind of highlighting with my browser here, or my cursor, the S&P 500 has broken above the 50-day, and last 3 or 4 days, it either traded above or right around its 200-day moving average. So that's why we have a position. It broke out. It's getting stronger, and that's really what I'm saying is the thing. But the problem that we have here in this market is that we have the three big reasons remain as to why the market has a lot of headwinds. Number one is inflation and the Fed's attempt to fight that inflation. They've got an aggressive rate schedule, potentially six more interest rate hikes. That'll put interest rates somewhere between 1.75 to 2% by the end of 2022, and they're cutting back on their bond buying program. And there's more evidence to me that seems like there's some slowing in the economy, but there isn't any slowing in the inflation. I think it's going to get, we've got things happening. It's going to happen pretty fast in terms of, activity is going to pick up when people start on vacation and traveling. And so I don't see oil prices going down. I really don't see, maybe the war in Russia-Ukraine will come to, a negotiated settlement or peace treaty or something, but who knows? It's all impossible to guess. So as usual, I'm going to look at the strength in the market. I have about 7 ETFs that I think I would call them strong. The first one I'm going to look at is XLE. And you can see it's a nice, strong ETF trading above its 50-day moving average. The 50-day just broke out about 6 months ago and has done nothing but go up. So that's really a nice looking chart. And we have a position in that. XLB, that is the materials sector. Same look in terms of, actually we had a death cross on that. We had a black cross here, but look at this move off this bottom. And we got in that one at 85, and it's looking like it's going to go up and at least test the old highs. Now, there's not a lot of people out there that think that this market is going to go and test the old highs, but I don't know that. Nobody really knows, but I'm not discounting that possibility because this market can do anything. XME, that is metals and mining, very strong chart. It crossed here just about a week worth, and then off to the races we go. So that's a very strong one. ITA is the aerospace and defense. We got a position in that one. Broke down a little bit here, but there again we have a golden cross. When the blue line crosses the red line, it's a golden cross, and so we're off to the races on that one as well. USO, I think I just got stopped out of this one. Yes, I did. Got stopped out here on this one, but it's still a strong looking chart, and we will get back in it if it gets above 82.50 or around 82.50. UNG. Hard to believe it, but natural gas has done a golden cross. It actually went below for, looks like a month or so there, and now it's back above, and Biden says he's going to allow them to drill or export natural gas to Europe. So that is a wind beneath the sails of natural gas. The last strong ETF I've got is silver. I just had the golden cross right here. I mean, it's strong. It's relatively speaking, it's strong. But I think we have a position in SPY. I think we covered that on the first chart. We also have a position in the industrial sector. Now, I didn't call this one strong, but it's getting stronger. You can see again, we've traded 3 out of the last 4 days have been above its 200-day moving average, even though it had the death cross last month. So now there still is some weakness. Well, I like to look at IYT. That is the transports. Again, that one it's a strong one. It's getting stronger, I should say, but you have lower highs here. So until it breaks above this old peak there, I'm not going to call it strong, but we would take a position in it at 60, but it just chopped around this week. It was kind of a choppy market this week. Okay, my last one, I do want to look at some weakness, and that would be in IYR. That's a weak chart there. Again, it's bottomed. It looks like it's bottomed out, but it can't even get over its 200-day moving average. And if we look at the home builders, HB, that's the cousin, the IYR, it looks even worse. So broke down about a month ago, and boy, it isn't looking too good. IWF, that is usually has been a good trading ETF for us. That's the Russell 1000, but it has broke down and it hasn't been able to go anywhere. It is forming this W pattern, but it's got somewhere it needs to get up and go here. Last one, XRT. We need the retail, and it doesn't look like they're going to participate. Geez, it's hovering around its 50-day, which is over 10 points below its 200-day. So that's an ugly one. All right, well, that's enough of the charts. Let's take a look at how we did real quickly here. Well, I should point out the market still is in correction, has been since January 19th, and we still 34% of the stocks that FinViz, the financial software that I follow, has 4,500 stocks. Only 34% of them are above their 200-day moving average, so that's not good. And for the week, the NASDAQ was really good, really strong, 3% for the month, but it's 9.4% down on the year-to-date. Believe it or not, the NYSE is the best. It's only 2.2% off its high. The Russell is 7.5% off. But none of these indices, other than New York, is above its 200-day moving average. But the Dow had the S&P 500 had a nice move this month, nice move this week. So, and we are crushing the market. 12% gain current month. I think we made 2.8% this week and 40% gain year to date through March 25th. Become a patron. Highlight that in your browser. It only costs $20 a month. If you like this video, smash that like, share, and subscribe button. This is Greg Gallagher with G3 Investors, wishing you good trading